guys, Tricia Turner here. It is Tuesday. It is 12:30-ish. This is Anything But Average, Achieving Success in Life. So Chris Waters was supposed to be my guest on the show today. I'm watching the screen right now to see if he pops on. I sent him the invite, of course, the calendar invite. His schedule's super busy too, y'all. But I didn't get him the StreamYard link until a short time ago. So there's a chance that he could pop on. There's also a chance that something came up and I didn't get a notification. So we'll see. So I'm keeping a watch to see if I can add him to the stream. If not, I'm just going to give you guys a quick update. The reason that I was doing it late today instead of at 12 o'clock is because there was an economic forecast. And because of COVID, it was done virtually. And so the Greater Houston Builders Association and the National Builders Association, they get together, of course, annually, and they give us a forecast of what's expected for the economy, for construction, for new construction, resale, job forecast, all that kind of stuff. And so that was going on today virtually. And so definitely wanted to tune into that. And it was on from 11 to 12:30. And so I'm waiting to see if Chris jumps on now. But to give you guys a quick update. Hey, my name's Tricia Turner. Number one, if you don't know, I'm a real estate broker here in Houston. I run a mega team with EXP. My team is the Tricia Turner Properties Group. We are laser focused on helping the consumers have an amazing experience, making sure that they are always number one in our focus and that we are always looking ahead. We're never worried about what's behind us, but always innovative, watching what's coming. So what disruptors are coming? What do we need to do to make sure that we're ahead of that? What do we need to do to make sure that our clients are taken care of the most? What do we need to do to make sure that we're pricing our homes effectively? And what's the market look like in 3, 6, 9 months? What's projected? And so the housing market, as you know, has been on fire since even before COVID. Traditionally, our season usually starts, February-ish, runs until about August. It'll start tapering off, of course, once school starts. And then it'll be slow about September. October is usually good. November's good. And then, of course, the first couple of weeks in December are good because people want to be in by the end of December in order to get the homestead exemption for the following year. So with COVID, though, last year, all different kinds of things were happening. It was a whole different market. And so even right before COVID started or COVID hit us, we were experiencing a great, oh, here comes Chris. I'm getting him on. Okay, so I'll have to fill you guys in later. Let me add it to the stream. I just saw him get on.
Sorry for the delay.
You're too funny. That's okay. I was like, well, at some point you're probably going to jump on. I'll just keep talking until you do. Hey.
We have a big announcement. Chris Waters is joining EXP.
Right.
Just kidding. Just kidding.
I know. Hey, you.
There'd be so many people at EXP so mad at me for not getting under their downline.
They would be. Oh my gosh. Someone's probably already going to start messaging you and me both. You probably just created all kinds of chaos.
Yeah. So yeah, anyways, Tricia, I'm super excited to be on here. Thank you for having me on.
So sorry that my link came in really late. I explained it beforehand. Hey, so I want to, because for people that don't know who you are, I think, first of all, you're amazing, as you know, and I learned so much from you. And I tell everybody, honestly, either you need to be following Chris Waters or you need to be with us at EXP. There's no better business model, period. That's the truth. And so I tell everybody that, I would love it if you could kind of share a little bit about your backstory for people that don't know before I start just asking you questions. Let's let everybody know a little bit about your history.
Yeah, so got started in real estate really full-time 10 years ago. And I had invested in a bar and restaurant that failed massively. And I was dead broke. And I had way too much pride to go live with my parents at that time. I was 24 years old. And so I was sleeping on my girlfriend's couch. She didn't know that like I was basically evicted from my apartment. I asked her if I could stay there for a couple of days, and a couple of days turned into us getting married like 5 years later, which was that was probably the most amazing thing that came out of that complete disaster of a business. But anyways, 2010, I'm like beyond broke. I owe a ton of people a lot of money. And, I was very humble and very coachable. And I started hammering the phones, calling my database, doing open houses. I was generating leads online, working internet leads. Just doing everything. And, started having some success. Truthfully, I needed to actually make even more money even faster because I owed so many people so much money. And so I started hiring agents on my team. And my goal was to get them to follow in my footsteps. And in the summer of 2010, I recruited 20, I think it was 18, 19, 20 people. And I'd like to tell you it all went great, but truthfully, in the first year, it was a complete disaster. In the first year, we sold 98 homes, but out of those 98 homes, me and one other guy sold 80 of them. And the other 18 agents sold 18 homes. And so the guy I'm referencing is Bradley Pounds. And he was one of the first buyer agents I hired. I sent him a cold message on Facebook and he agreed to meet with me. And 10 years later, he co-authored this book with me. He's a key pivotal person in the company. But, after that 1 year of failing miserably at helping agents have success, I went to Brad and I said, hey, will you focus on the recruiting, selection, training, leading, and motivating of the buyer agent team? I'm going to go build up the listing team and let's go divide and conquer. And, and so that's exactly what we did. And, we basically burned the whole thing down, started from ground zero and, literally cut every agent on the team. It was just Brad and I. I got an executive assistant at a certain point within that first 12 months. And, we brought on, I think it was 6, 7, 8 agents, and we did 150 closings in from 2011 to 2012, we did 150 closings. Subsequent year, we did 325. And Brad and I have sat in a lot of conferences and masterminds and stuff. And a lot of people asked us, how did you guys scale to over 100 million in sales in 3 years after you burned it down the first year? So I guess we technically did it in 2 years because the first year was a complete wash. But anyways, a lot of people asked us how we did it. So we, documented our journey of how we scaled the team. And the other kind of interesting thing is I'm starting to realize I've been at this, real estate now a while, 10 years is quite a while. And what makes me think about that is I had somebody in my office yesterday come to do an office tour. And they asked me what my sales volume was back in 2010, 2011, 2012. And I don't really remember sales volumes. I just more remember how many families we served.
Yep.
And, and so I started thinking about it in that moment and I'm like, holy cow, our sales price back then, our average sales price was $150,000 to $160,000. And so on those 325 units, our sales volume was 60, 70 million. And it was that third year when we broke 400 deals, when we got to 100 million in sales. But, it's crazy how much has changed in the last 10 years. So anyways, we grew the team super fast. Our average listing agent was selling between 90 and 120 homes a year per listing agent. Our inside sales reps were booking 90 to 120 appointments per month. We got our agents to be crazy productive. And then in 2014, we started testing expansion. Before expansion was really a thing, we opened up our first team. We partnered with somebody in a small town in Texas, Amarillo, Texas. And we partnered with a solo agent that had been in the business for about 10 years. And she kind of hit a ceiling doing about 30 deals. She had a hard time getting over that number. And in our first year of working together, she did just a hair under 100 closings in our first year. And
nice.
then she grew to 200 and then 300 closings. And so in 2014, when she really took off, we were maybe we're on to something. So in 2015, we tested another market, 2016, another market, 2017, another market, and everybody kept growing like crazy. And so we were like, okay, how can we take this business in a box solution to people all over? And we didn't really care a whole lot about the brand of the company. Like, like we didn't care about people knowing who we were from a branding perspective. The thing we kind of discovered is in a team-centric model, when you think about like the marketing channels you leverage to generate buyer and seller leads, like you need somebody at the team level at the top who is kind of the celebrity in the marketplace.
Yep.
And you need to push them, not the name of the brokerage.
Mm-hmm.
And so that's why we decided, we're not going to make this about a brand deal, and we were just going to give people all the, give them the playbook on how to execute and scale the team model really fast. Give them all the assets we built, everything. And so, anyways, we went and met the chief legal counsel for Gary Keller. She was the chief legal counsel for Keller Williams International for 10 years, and she left KW to join a boutique practice so she could take on other clients and start building a book of business or whatever outside of Keller Williams. And we described to her what we were trying to do. And she said, Chris, what y'all are describing is a franchise. And I'm like, no. I don't want to be a franchise. Like, this isn't about the brand. And she's like, no, you got it all wrong. Like, people think franchising is about the brand, but franchising is about the operating manuals and the systems and the assets. Yeah. She said to me, a licensing deal is like when Nike licenses their logo to a t-shirt maker. That's a licensing deal. And like, I guess in my mind, I always thought franchising was about the brand. And then, she kind of opened up my eyes. And so we said, well, hey, look, we want to start a franchise, but we don't want anybody to worry about using our branding. And so we got licensed as a franchisor in the US and Canada. And we've helped 15 people across the US and Canada in both big markets and small markets grow their teams. And it's been a fun ride for sure. So
you have Bradley still doing it with you, and he's amazing. I just love you guys are just awesome. I think you're so giving. Y'all give back. You really care, about people's success.
Yeah, I mean, what's it's interesting is I recently got on this app called Clubhouse.
Yes.
And for anybody that's listening, I think my Clubhouse user ID is @ChrisWaters. So if anybody wants to look me up on there, but I plug into these groups on Clubhouse, and I can tell some of these people, like, they must be on there like 24/7.
Yes.
Because like I see them on there every time I log in at all different random times. And, I hear them giving people advice, and it's so frustrating to hear sometimes the advice they give people because, the person they're talking to, they don't have enough context around that person's business. Mm-hmm. And so probably like Brad and I's greatest breakthrough, like as we were helping people expand across the country, is like the systems and processes and people, like all these different things you need, they change radically at different stages of the growth curve as your business grows. And like, we had to learn this the hard way. Like our teams, our early teams back 5-6 years ago, we were giving them stuff that our team in Austin was using, and our team in Austin was huge, right? And these like tools and systems we gave to these teams in what we call the early climb, it was like a massive distraction to these teams and their growth. Mm-hmm. And so like I remember I think it was last night or the night before, I got on Clubhouse, and somebody was, a brand new agent came on and said, what should I do to get started and grow my business? She said, I think the agent said something like, I know video marketing is really big. And this agent said, yeah, start creating content on contracts and like all the stuff you're learning. And I'm just kind of like thinking to myself, I'm like, I'm a big fan of Gary Vaynerchuk. He talks about content and all that kind of stuff. But like as a real estate agent, what's really important in the beginning of your career is to develop as a salesperson, develop market expertise, and go after the low-hanging fruit of business to go and acquire. And like doing videos and stuff, I'm not saying don't do it, but it's like there's a right time and place for everything. Mm-hmm. And video, creating a bunch of videos and YouTube channels and all that stuff, like it takes a long time to generate clients through those avenues. There's two types of marketing. There's, what I would call direct response marketing, which is like, you pay Zillow like $1,000 and they get you, 20, 30 leads. Or you spend money on Google, $1,000 and you get 20, 30 leads. And then there's like what's called brand equity building campaigns. And brand equity building campaigns take a long time to work. They're actually the most effective strategy over the long run. But like when you're first starting your career, unless you have a lot of money in the bank, like you're going to go broke waiting to see the results from brand equity building campaigns.
Yep.
So anyways, I think for Brad and I, like the reason why we like sharing so much is because we've literally like failed so many times. And like, I feel like, we've screwed it up every way imaginable. And, we want to put content and info out there to help people because like we've seen it all, like we've helped now 15 teams scale from, doing 30 deals to, 400 in 3 years. And so, I think it's Tony Robbins, Tony Robbins says, if you want to find success, go find somebody that's already doing what you want to do and just follow in their footsteps.
Yeah.
And and this was a mistake I think I made early in my career. Like I'm 24 getting into real estate and I'm like trying to get all creative. I'm like, oh, I'm going to go, compete with Zillow and build this amazing thing and be super unique or whatever and scratch my entrepreneurial itch or whatever. But like, I didn't have hundreds of millions of dollars to go like R&D and figure it out like Zillow. So, I mean, if you're bootstrapping your business, like there is a very, strategic roadmap, in my opinion, on how you do that. And, hey, if you're watching this and you can go raise $100 million, 200, 300 million, yeah, go R&D, test and fail until your heart's content. But, otherwise, remember that the real estate industry is, I always ask people, when was the National Association of Realtors formed? You've heard me ask that many times. And it's just, I guess it's just like, I always ask that question because, like people forget like this industry is old. Like it's been around for, NAR was formed in 1908. Like there are so many people that have walked this walk before us.
Okay, so on that note, your model that you build is basically, for people that don't know, is a team-centric model. You call it broker in a box. I think it's an amazing concept. I'm like you. I study things like crazy, and that's why I really wanted you on today because I know you're the same way. You're constantly in learner mode, and so we've been hearing for at least the last 2 years how mega teams, team-centric models, those are going to be the biggest disruptors. That is where the real estate market is headed. What's your thoughts now on that? And here we are in 2021.
Yeah, I mean, it's just gonna, it's gonna continue. I mean, if you look at companies like Zillow, right? I mean, they're trying to basically become a mega team. Like they have, these massive centralized inside sales departments. They've got the Zillow offers call to action to generate seller leads. They've got the consumer attention on the buy side. They're, Inman, you can read this in Inman. Zillow's, again, as already licensed as a broker in a lot of states across the US. And then, you look at, Redfin, like honestly, Redfin is the one to beat. Like people can talk about, like you don't get full service at the discount commission and all that stuff. But like, that they can flip that on a dime, right? Like Redfin can be like, okay, no more 1% discount commission. Everybody knows who we are. And they can start making profit, like they're not making, I don't believe they're making money yet. And it's a lot to do with, the reduced commissions, but the organizational structure of Redfin is very similar to the team-centric model. It's very, very similar. And, they have lots of consumers on the platform. And I would even say like their tech is really good. Like a consumer can literally go to the listing detailed page and on a Redfin property, the consumer using the app can schedule a tour and open the lockbox without an agent.
Isn't that insane?
And then you can go on the app and make an offer without an agent. And for anybody that thinks like, oh, it's probably not this good of an experience or it's not that good of a process, you will be wildly mistaken, because I was blown away how amazing the user interface was for a consumer to go through and fill out all of these forms. Basically what they did is they took the standardized contract and then they created a user experience where you fill in those data fields, like you would, you're filling out the contract as an agent. And then they have, Redfin has some amazing machine learning and AI that, kind of helps guide the consumer through the process based off how much activity listings are getting. So, I mean, it's, these tech companies are really trying to diminish the role of agents, automate a lot of stuff. And, the only groups that are going to be well positioned to compete with these guys are going to be these mega teams, because the solo agent, like, I mean, imagine an agent at Redfin competing with a just an agent at some other random brokerage. Redfin, they've got marketing, they've got the technology platform, they have lots of people on there. They can put in the MLS. Oh, and by the way, they'll do it at a discount. Like, their value proposition is really, really strong. So, the mega teams, I think they leverage a different type of value proposition. So instead of it being about the discount model, it's about driving massive value through the listing presentation and very specific, like, bells and whistles you can offer to a seller to, make their experience better. So it's kind of like the Neiman Marcus approach versus, Costco.
Yes.
So
how disruptive do you think that will be this year?
So, like, I think it was 1 year ago, Redfin launched the make an offer without an agent feature on their website, and they launched it in Boston. And I mean, I'm guessing it was very successful because they've expanded it into 7 markets now, and it's in my market in Austin. That's how I was able to test it.
Okay.
So they're slowly rolling this out across the country. And, if you could imagine, like, the lead quality of someone that goes through the process of, like, submitting an offer on their own behalf, like, that's a lead that's really far along in the journey and highly likely to convert, right?
Yes.
And so, like, they are, I mean, they're getting, Redfin's getting super high quality leads as a result of the tech they're leveraging. So I think, it's, in terms of how that disrupts the industry, it's really a function of how fast consumers adopt the technology. So, like, it's like the Uber app, right? Like, when Uber took off, it took off super fast. Like, the Uber app went viral. So I think the thing we have to ask ourselves is, how likely is one of these apps to go viral in real estate to automate a lot of the processes? And I know that's a good question. Like, I think the like, people that are buying homes typically it's a younger audience.
Yeah.
And so I think they're more willing to adopt emerging technology and like, some of the functionality Redfin has. But the older audience, which are, primarily sellers, like age 45 to 65, they're a little bit slower to adopt technology, a little bit more fearful. Granted, they've got a huge asset, they don't want to screw it up. And so, I think, I've said this for the last 5 years. I've said that I don't think the industry really gets flipped upside down until the median age of a homeowner is the Millennial Generation. So, like, the Millennial Generation is the first generation that's, like, super open to technology, like privacy and all that stuff. Like, they don't really care. Like, they're just throw stuff up on the web. And so that generation, I think, is most likely to, adopt technology to market their house, this huge asset. And so the average millennial, like the average millennial, I think, is like 29 to 37 or 38 years old, something like that. And so I think when that segment of the market gets to about 45, which is the average age of a homeowner selling, I think that's when we could see a huge shift. So I think we will see massive disruption over the next 5 to 7 years. I don't think it happens as fast as what went down with Uber. I think it's a gradual shift to where the role of the agent continues to get minimized as technology takes over a part of the customer journey.
Okay. And now, remember, a couple of years ago when the iBuyer programs were just the big rave, and that was the disruptor, and it's pretty quiet right now. What's your thoughts about the future of that?
I don't think it's going away. the thing that I don't think most people understand is like, first off, these iBuyers are using some really crazy technology called machine learning, and they are collecting massive amounts of data, and they are getting really good at their formulas to come up with the acquisition price. And the thing that the iBuyers look at is where price is going moving forward. So for example, if for anybody watching this that pays attention to absorption rates, when the absorption rate is less than 1 month, it means we're in a super hot seller's market. And so prices are going up every day. And so some people could be like, these iBuyers are stupid. They're buying, houses at these crazy high prices. How are they going to make any money? Well, the thing is like they may buy it today, and then in like 3 or 4 months, they can list it for $10,000 more. And so then their strike price of what they pay, that can also go down in a declining market, right? So like as the absorption rate changes, they can also, decrease their purchase price. So I think ultimately, for iBuyers, the thing that they're trying to do is just get the consumer in their pipeline, because there's a lot of ancillary revenue that can be made once you've got the consumer committed.
Yes.
So I think, for example, I've heard, companies like Redfin, Zillow, some of the others, they are getting like 70 to 80% attrition from people that you leverage the iBuyer and then go and get a mortgage.
Yeah.
And one of the crazy things it's been kind of an aha for me is I don't think most agents understand how much money mortgage companies make. Mm-hmm. So for example, like on a federal, like on a, federally regulated loan program like FHA, VA, USDA, the average bank makes between 5 and 7% of the loan value. That's the gross revenue they make. And so a lot of real estate agents think that, the banks are making 1% and some closing costs. That's what the loan officer is getting paid, not the bank. Yep. So the banks make a lot of money on the secondary markets when they pull these loans together and resell them. And so there's a lot of money on the mortgage side. And then there's other ancillary services like homeowners insurance, moving companies, I talk about this all the time in my brand ambassador program is there's 26 different businesses that get impacted by the sale of a home. NAR does a report where you can go on NAR and it's a map of the United States, and you can click on the state and it'll tell you how much of an economic impact the sale of a house has. And so like in the state of Texas, when a sale of a house happens in the state of Texas, it's over $80,000 that gets injected into the U.S. economy. And I don't think a lot of agents think about where all that money is going. I mean, I did this just a couple of days ago. You click on California, it's over $110,000 every time a sale happens. So
you gotta wonder, where is that going,
Right. So it's like there's a lot of money being made when a sale happens, and the agent commission is just a tiny piece of it.
Okay, so in your market there in Austin, I know it's on fire, and it has been, and people equate your market to California, how prices were skyrocketing because people are fleeing California and they're going to Austin. Yeah. What is your thoughts on that? And do you see this continuing, or do you see it busting at some point?
So, I mean, the basic economics 101 thing is, price is a function of supply and demand. Yep. And what drives demand is interest rates and job growth. Mm-hmm. And so, on the demand side, interest rates are crazy low, and companies are moving to Austin like crazy. We have Tesla's moving their headquarters here. Oracle just announced to build some campus with 10,000 employees. We have so many people moving to the Austin market. And so as long as the job market stays strong and companies keep moving here, we've got demand. Mm-hmm. And then the other component is interest rates. So as long as the Fed keeps interest rates down, then we're going to have continued strong demand. On the supply side of the equation, the only thing that can suppress prices is two things. One, if there's a lot of new construction or the city changes the zoning on how high density of projects you can build on a tract of land. And so, builders and developers can keep prices from going up so fast and kind of suppress prices a little bit. But like in the city of Austin, the challenge we have is we've been trying for 3 to 4 years to get zoning changes so that developers can, do higher density projects, because the cost of land is very expensive. And so the unit economics don't work. And so we haven't been able to get anything passed on, trying to improve high density projects. And so therefore prices just keep going up. There's not enough supply. And Austin, unlike Houston and Dallas, like we don't have a big loop that goes around the city.
Yeah.
Like we basically have 2 main highways that run north and south. And so it's a little bit more difficult to like get around the city. And so we're a little bit landlocked. We have a lot of land in the outlying areas, 30 to 40 minutes out of the core of Austin. And that's actually where our team does most of its business, is in all the suburbs. So those are the areas where prices are still going up, but there's also new construction happening. But I think this is like the new norm, like
Crazy.
I think it's the new norm. Like, I don't, unless something happens from a macroeconomic perspective, interest rates go up. I don't know, like something like that happens. I don't know, some like massive global recession, like what happened in 2008 or when COVID hit. Like that's the only thing that slows down the market. Otherwise, this is the new norm. Like I think Austin's going to be the most expensive market in the state of Texas as time keeps going on.
Yeah. What's your inventory like there now?
It's crazy low. It's less than a month. We have like 3 to 4 weeks of inventory, and it's contingent on price point. There's some price points in the suburbs where it's not as hot, but I mean, I had just before I got on this call with you, I have some friends that are trying to move out to a suburb of Austin called Dripping Springs.
Mm-hmm.
And I remember when I was like, a practicing agent 7 years ago, that area, you could buy like an amazing house on 10 acres and, spend like $500,000-$700,000. And these friends of mine, they're looking to spend about $1 million. And I logged in the MLS just to check. I was just curious what you could get out there. And there was not a single house listed under $1 million. And the closest thing I could find was listed for 1.4 million. That was like, nice or whatever. And so it's just crazy.
Houston, our normal market's 3 to 6 months of inventory. So right now in Houston, we're under 2 months of inventory, which is crazy low. But it's weird here because in Houston, Inner Loop near the Galleria, close to downtown, was always the hottest market. Suburbs were hot too, but that was always like the hottest. Well, since COVID, and now there's people going to school at home and there's people working from home, the suburbs are on fire. It's almost flipped because the houses inside the loop and closer to downtown, they're sitting. The homes there, they're older, of course, but they're priced, over $1 million. They're sitting longer than the suburbs because people are wanting to get away. Yeah. And so our inventory, thankfully, and now I'm looking at like ahead because here we're coming up on February. So now we're on listing appointments here in our office every day. So we're getting inventory. It's coming. I see it coming. And so I'm happy there. There's light at the end of the tunnel. But I talked to a good friend of mine Friday. He's in Dallas. He's a broker there. He runs a team. And he said in December, they only had 3 active listings on their team, which they have not had since 2009. They have less than 2 weeks of inventory. He's like, we're freaking out here. That's not the feeling.
I'm in the same boat. We typically have 150 to 200 listings in our pipeline. And we are down to 14 active listings.
Holy crap.
Yeah.
That's insane. And see, for consumers and other agents that don't really understand the economics, that isn't a good thing. People are like, wow, y'all are killing it. That's not a good thing because you got agents you have to take care of and their families. And then your agents start freaking out like, what are we going to do? How are we going to sell homes?
Yep. Yeah. I mean, you don't want the market to be too hot and you don't want it to be too cold.
You don't. And so I think it's like our duty as leaders in the industry that because we drive the economy. The moment that you stop doing what you do because you're out hustling every day, you're not selling homes, but you're growing a business. Here I'm growing our team. We're growing a business. We're all focused on the same thing. But the minute that we let off the gas and decide, I don't feel like doing this anymore, there's a problem there because who's going to pick it up and say, I'll do it,
Yep. Yep.
Like you said, there's 26 different vendors that need us to keep this economy rolling and these houses rolling. which means whatever it takes. If you get your agents out there door knocking, get on the phone. There's people out there that want to sell their home. They're just afraid that they can't find their next home. And like I told everybody, okay, you may not find it today, so you just go into temporary housing right now, and then you will find it. But get your freaking home sold, because the market is on fire right now. You know? You'll
Exactly.
sell for top dollar.
I think a lot of people too would be surprised how much more their house would sell for just compared to a year ago.
Isn't that insane? People I know in Austin have been like, I can't even afford to live here anymore. You know, I can't sell my house and buy what I want because I can't afford the next house. But remember, people say that in California years ago.
I mean, I think kind of the sweet spot right now is like you can, unless you've refinanced recently, you could sell your house and potentially go buy a more expensive one and get a lower interest rate. And so your payment would be the same as your current house if you were able to get a lower interest rate on your next one.
So in Austin, as far as like COVID goes, and we don't know how like the future is going to go, have you guys seen anything, or what are your predictions for this year as far as your market goes? Are we going to get shut down again? Is Austin going to get shut down again? What's your concerns there? And then how do you pivot from there?
Yeah, I don't think we're going to get shut down again. I think we're gonna keep going guns a-blazing. I mean, I know there's a massive inventory shortage right now, but I'm very optimistic there's going to be a massive surge of new inventory to hit this spring. I think there's so much media, so much messaging out there about how good the market is. I think we're going to see a huge surge of inventory. And so, I mean, my expectation is from like a pure transactional perspective, I think we're going to see a huge increase in the total number of transactions done this year, which equates to commission dollars. So I think we're going to see a huge increase in commission dollars and transactions created this year. But right now, we're all feeling the pain. I mean, it's tough. Getting listings is tough. Also, time of year, people have these preconceived notions about listing their house this time of year. But I think like this coming spring, we are going to be like, it's going to be bananas.
I do too. Okay, so let me pick your brain about one more thing, because this is a hot topic and you hear about it locally and nationally. Everyone's talking about this foreclosures. They're coming. What's your thoughts? I want to hear what you think about that. Are they coming?
So, I mean, there's no doubt that they are. I mean, I think I read there's 1.8 million homes in serious delinquency. And so, a lot of those folks are going to have to sell their house. And, the thing though, I think people should probably recognize is this time around in 2021, we're in a super hot market. And so those people can actually sell their houses for a profit. And so a lot more transactions will get completed on the retail market versus on the REO market, because back in 2007, 8, 9, a lot of these houses got foreclosed on because people were upside down. But this time around, people aren't upside down. They have equity in their house. They're just, hoping through forbearance, they can find another job and get caught back up. And so I think the people that are facing serious delinquency, whenever the Fed says, they're no longer going to, keep the moratorium on mortgage payments, whenever they lift that, and they say, okay, now the banks can foreclose on people. I think whenever that happens, we're going to see a massive surge of people that have been in forbearance. We've already, like our team, we've been getting calls for probably the past 2 months from people that haven't made a payment in 5 months and they're deciding to sell. So I think that's going to continue to surge. I think that could be something that helps, provide some very much needed supply for the market this coming spring and summer.
So, what we're seeing here on that note is that is happening. We're having the same thing here in our office. And of course, some of these people are unemployed or they're on a furlough. And so they can't go and get a loan. They can't buy another home. So they're becoming renters for the next year or two. And they're having to pay cash, of course, because they've got equity for rent for the next year or two. Are you guys seeing that there in Austin?
Yeah, same exact thing. Yeah. Yep.
Which is crazy, because then that increases the rental market. Like homes in the rental market are flying off. People, I just had a conversation the other day and he's like, did you see what the rents are going for in this neighborhood? He said the neighborhood. He's like, that's crazy. And I said, they'll get it right now. They'll get it. Like like it's a weird world that we're living in the real estate industry right now. But you know what? It's cyclical. We've seen this happen before, and we'll see it again. It's not going to last forever. You usually see it run for like a year and a half to 2.5 years, you know? So when you look at the timeline, we're already pretty much halfway through it.
Yeah. I mean, I think I was reading some reports about like, you know, there's a lot of people concerned we're in it. Well, this has been for a while, but a lot of people are really concerned we're in this, you know, massive asset bubble. Like you hear about Tesla stock going up 800% in a year, you know, these technology companies, like, you know, these guys, you know, like, what is it? I heard Elon Musk now is the richest person. He beat Jeff Bezos. So anyways, like we're, you know, the stock market's like north of 30,000. So all these, you know, these asset values, real estate, stocks, whatever, they keep going up in value because the Federal Reserve has been injecting trillions and trillions of dollars in the U.S. economy. And so, you know, like the Fed has the levers to push and pull to speed the economy up, slow it down. So like there's things they undoubtedly will probably do over the next 12 to 18 months to slow down this like dramatic growth in asset values, real estate stocks. So I think we've probably got like a good 12-month runway ahead of us where we can go gangbusters and make a lot of money. I think in 2022, you know, the Biden administration, you know, I think they're going to be thinking about like, how do we help close the gap between the super rich and the super poor? And what's been making the rich get super rich is this increase in asset values. That's, you know, real estate prices, stock prices. And so I think in 2022, that's when we'll start to see them, you know, make some pivots around just like policies, you know, fiscal policies to slow down the growth of asset prices. And I think that's when the market starts to slow down again.
I think so too. I think exactly like you said, I think this year is going to be amazing. And I think next year we're going to see a lot more balance in a lot of things. And people maybe need to be a little bit more cautious next year, you know?
Yeah. Yep. So anybody that's got real estate, you better, I'd be seriously considering selling it now, cashing out.
Sell high, right?
That's right.
Hey, Chris, thank you so much for being here today. How can somebody find you to learn a little bit more about you and your organization and maybe answer some questions?
Yeah, so I got a little special gift for anybody that's listening to this. This is the book Brad and I wrote. I'll send out a copy to anybody that wants this. It's a book on our journey of building a team. And we talk about the unique phases of the growth curve. And I have a...
I'm going to plug that book because I have the book and I've read it probably 3 or 4 times, and it's an amazing book. So I'm thankful that you're that way.
So go to it's a long domain name. You can buy the book on Amazon and it's got Audible, but I have a landing page where you can get the book for free. And the domain name is themilliondollarrealestateteam.com. I know it's crazy long. It's just a landing page so we can give the book out for free to people we want to. Themilliondollarrealestateteam.com if you want to pick up a free copy of the book. And beyond that, hit me up on Clubhouse. You can look me up just at Chris Waters. And then I'm also on Instagram. I don't even have Instagram on my cell phone. My team runs my Instagram app because it's just such a distraction. So, I mean, if you DM me on Instagram, like my team will email it to me and I'll get it. So, but I am on Clubhouse a lot lately. I've been on Clubhouse a lot, like hosting rooms and stuff. It is. Clubhouse is really fun. It's a lot of fun.
My son is 23 years old and I'm in a partnership with him now in this baseball complex. And he came in my bathroom this morning when I was getting ready and I had Clubhouse on. I was in a room and I told him, I've told you 4 times now to download the Clubhouse app on your phone. I will send you a freaking invite. You're an idiot if you do not get on Clubhouse right now. This is free. You learn from these. Grant Cardone's in the room I'm in with right now. You know, this is crazy. And he's like, all right, Mom. But it's a cool app, isn't it?
It's amazing. I mean, it's like you're at a conference hearing like some, authority speak on a subject and you can raise your hand and ask questions.
Yeah, it's not anything. It's just random. It's just conversations. It's cool.
Yeah, it's really cool.
I'll have to look you up on there too. Thank you so much for being here today.
Yeah, thanks so much for having me, Tricia.
See you soon.
Bye,
y'all.